Welcome to the Daily Business and Finance Show. Tesla's market dip, a reality check or golden opportunity? Bezos cashes out $2 billion in Amazon stock, and the crypto conundrum for institutional traders. REITs rise on rate cut hopes and solid results, while U.S. oil premium soars over natural gas. Bitcoin rally boosts Riot, CleanSpark, Marathon as week's top financial gainers. Super Bowl betting buzz, the Taylor Swift effect and BetMGM's deal with Elon Musk's X ETF movers of the week, Boyle, SOXS, KOLD take center stage. Finally, M&A activity propels Masonite to industrial gainer of the week while Insperity takes a hit. Stay tuned after this short ad break to delve deeper into these headlines. Despite a slow-moving share price and less than impressive forecast for Tesla, industry specialists such as Cathie Wood from ARK Invest and Dan Ives from Wedbush Securities maintain a positive outlook on the electric vehicle market. They anticipate a revival in growth due to the emergence of self-driving taxi networks and project that by the close of this decade, 1 in every 5 cars will be electric. Nevertheless, doubts surrounding Elon Musk's involvement and artificial intelligence initiatives present obstacles for investor assurance.
Jeff Bezos, the executive chair of Amazon, has recently sold shares amounting to over $2 billion within this week. Even with this significant sale, Bezos continues to hold roughly 976 million shares in Amazon. This action is in line with his newly adopted plan that permits him to sell as many as 50 million shares prior to the start of next year.
In 2023, Bitcoin experienced a significant increase of 165%. However, a survey conducted by J.P. Morgan indicates that approximately 78% of institutional traders do not intend to engage in cryptocurrency trading within the upcoming 5 years. The instability of the crypto market, demonstrated by Bitcoin and Ether's respective decreases of around 65% and 69%, appears to discourage these traders. Nevertheless, there is a slight increase in interest as currently, about 9% are involved in crypto trading. In other news, it is anticipated that artificial intelligence and machine learning will have a substantial influence on trading over the next 3 years.
After a 3-week downturn, there was a minor uptick this week in real estate investment trusts, or REITs. This increase was fueled by the anticipation of a rate cut and robust results from key players such as Healthpeak Properties and Simon Property Group. Jerome Powell, the chair of the Federal Reserve, suggested a prudent approach to lowering interest rates in light of strong economic conditions. Concurrently, the S&P 500 reached an unprecedented high, primarily driven by technology stocks. In contrast, though, the FTSE Nareit Mortgage REITs Index experienced a drop of 3.2%. It's worth mentioning that numerous companies declared higher dividends and initiated new share buyback schemes.
Crude oil futures are witnessing an upward trend for the 5th session in a row, bouncing back from the previous week's losses which were triggered by escalating tensions in the Middle East and shrinking supplies. On the other hand, prices of natural gas in the U.S. have been on a downward spiral for 5 consecutive days, reaching their lowest point since September 2020. This decline is linked to above-average stock levels due to near-record production and a decrease in heating demand this winter season. Despite low prices promoting increased gas consumption over coal, there's hardly any coal left to substitute following recent power plant retirements.
In the past week, the financial stocks were topped by 3 Bitcoin miners, a cryptocurrency exchange, and an asset manager. On the other hand, 2 regional banks from the United States, 2 banks from Latin America, and a German lender experienced significant declines. Despite these contrasting performances, there was a minor increase in financial stocks overall. Leading the winners with substantial increases due to heightened Bitcoin mining revenue were Bitcoin miners CleanSpark and Marathon Digital. Conversely, New York Community Bancorp led the losses after its unexpected 4th quarter loss last week.
With the Super Bowl on the horizon, a surge in sports betting is anticipated by Morgan Stanley. This is expected to be fueled by heightened viewer engagement and viewership. Sportsbooks such as BetRivers and WynnBET are providing competitive odds, while DraftKings and FanDuel are concentrating on customer-friendly point spreads. In a unique move, BetMGM has collaborated with an undisclosed social media platform to incorporate its betting interface directly into the social feed. Despite experiencing a minor decline in market share, BetMGM announced a 36% revenue increase last year, reaching $1.96 billion.
In the exchange-traded fund market, significant gains of up to 31% were observed in Valkyrie Bitcoin miners, ProShares Ultrashort Bloomberg Natural Gas, Global X Blockchain and First Trust Skybridge Crypto Industry. However, ProShares Ultra Bloomberg Natural Gas and TRX 2X Inverse NVIDIA Daily Target experienced losses around the 21% mark. It is suggested by experts to book profits on KOLD due to a rating downgrade. Despite near-term risks, a bullish play into 2024 for BOIL has been spotted.
In the previous week, there was a rise of 1.19% in the industrial select sector. The S&P 500 set new records by going beyond 5,000 points. Masonite International was among the top gainers, with their shares skyrocketing over 40% due to a $3.9 billion acquisition deal with Owens Corning. Other companies that performed notably well were XPO and Advanced Drainage Systems, both surpassing market predictions. However, not all companies fared well, and Sparity and Vestas suffered significant losses owing to unsatisfactory quarterly results. And that's it for today on the Daily Business and Finance Show. Stay informed, stay invested. Until next time, keep turning ideas into actions. I'm Montgomery Jones.
And I'm Amalia Dupre. Until tomorrow, farewell. This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.